Okay, hi, I'm Miranda, and thank you again for inviting us back. Okay, so a little bit about myself. I did graduate with an accounting degree, and once I graduated, I started working for a CPA firm for about 6 years, and then I got my CPA license, and then decided that life in a public accounting environment wasn't for me, wasn't my personal goal later on when I was going to have a family. I just didn't want to work the hours that public accounting requires. So I decided that it was time now that I have my CPA license, I can, try private industry. And that's when a friend on the bus, we had a conversation, and that started my journey at PG&E. So I've been at PG&E next year over 20 years, and I've had experience there in corporate accounting as well as capital accounting. So I actually deal with actual numbers every day, not budgeted numbers. That's what I'm actually talking about. But we have to do like budget versus actual variance analysis. So I do know about budgeting. And so I guess the fun things that I do is that I'm married and I have 2 kids. I have 2 girls, 7 and 10 years old, so they keep me very busy. I'm their personal chauffeur. And then I like to try new cooking recipes. I'm always online looking for 5-star recipes. You guys can give me some if you find them. And then I'm also serving at this church as the children's ministry deaconess. So I'm actually talking not about children and not about music tonight, but I'm talking about women.
Hi, my name is Alfred Leong. I am a CPA and a lawyer. I graduated from UCLA with a degree in economics and a minor in accounting. Like Miranda, I started off in public accounting, but didn't really like it that much. Just like Miranda, I wound up actually working at PG&E's tax department, where I actually worked with Miranda, and I feel like Miranda has actually sold herself a little short, because Miranda deals in really big numbers, like really big numbers, lots and lots and lots of zeros behind them. So I have a lot of respect for that, because there's a lot of numbers there. And but after working at PG&E's tax department, I actually went to UC Hastings here in the city. I got a law degree. Practiced for a little bit as a tax lawyer, and decided that wasn't really for me. And the last 8-9 years I've been in private equity, dealing with real estate investments, multifamily real estate investments, what I call debt funds, which are really hedge funds. And currently I'm the controller for a very small, privately owned company that really just manages money for a very wealthy family. So that's pretty much all there is to me.
Hi, I'm Robert, and I'm a civil litigation attorney. I've been practicing since 1985, and I'm probably the one who professionally you're least likely to need. I handle big messes for people, and hopefully you'll never have to call me in a professional capacity. But I think my purpose on this panel is probably to describe my own personal experiences, first as a poor saver and also as a poor investor. After sitting on this panel, I think I've got a lot to learn, and I'm just grateful for the chance to sit up here and learn from some people who really know what they're doing.
Hi everyone, my name is Dennis Kwan. I'm a wealth financial advisor. Basically what I do is I help wealthy clients create a comprehensive financial plan that will help them accumulate wealth, distribute their wealth, and also protect their assets. I've been doing this 17 years. I started in 1997 after leaving UC Davis and studied managerial economics. Went to start working for Morgan Stanley. I did that for about 5 years, and then I went to Merrill Lynch for about 5 years. Same focus, but kind of different demographic with the market. And currently on investing. Although they didn't want me to be a financial advisor, they actually wanted me to be a doctor. So when I first went to Davis, I thought I was going to go the pre-med route, so I actually studied biological sciences for 4 years, and decided that wasn't for me, and I changed my major the last year, and got into the field that I'm really glad I didn't force myself down that path. So that's a little bit about it.
Great, thank you everyone. So, what will be your topic tonight for your small group? And give us a little quick summary of what will you be talking about?
Sure. So, a lot of people from last time kind of expressed some interest in kind of learning the process in order to make a good investment decision. So, I'm actually going to go over kind of like a research report on a specific investment and kind of point out the things that you want to look for and the things that you want to be careful about at the same time. So that's kind of what my focus is going to be.
And this is a very open forum where you can ask Dennis, specific questions, and it's going to be, like I said, in a smaller group setting. And Robert and I will be, talking about real estate, meaning purchasing versus renting in San Francisco. What's the difference, right? And how much do you need to put down, or what are the different options out there? And how? What do you do? Where do you even start? And so I'm going to go over some of the, mainly focusing on real estate, purchasing your first home, or maybe it's learning how to calculate your DTI, debt to income ratios, and basic calculations. So if you're interested in real estate, that's what Robert and I will be talking about. And then Alfred.
I'll be talking about taxes. Admittedly, I'm not entirely sure what you guys will need to know, so it'll be more of a Q&A about taxes and just about anything else you guys want to talk about. So, I'm open to answering questions about it, just about anything. So, yeah.
Because, let's say you have, free flow. There's different tax brackets, right? Let's say you make over a certain salary. Why are there different tax brackets? How do you even calculate it? And, stuff like that. I'm sure they can.
Yeah, I don't know. It's Friday night. I told Trevor, I sent Trevor an email. I'm like, because Trevor had said, have a hands-on activity for you guys. And I'm like, I really don't think the folks here want to spend their Friday night filling out a tax form. It just doesn't seem right. So anyhow.
How many of you would like to know how to file your own taxes? Okay, we have 7, 8. Okay, Miranda.
What I'll be talking about is more on budgeting, and then if you're interested in getting to know how to get out of your debt, I'll be covering that. So maybe for some of you guys, you're still trying to get out of your student loan debt, and if you want some tips on that, so I'll be covering that.
Great. So we're just going to break off at this time so we can get as much time as we can to, for your questions to be asked. And do you folks have any questions right now at this point? Any major questions that you want to ask the whole group? If no, we're just going to break off into different workshops. Let me see here. Dennis, would you like to take upstairs?
Sure.
Yeah, and then so Dennis will be upstairs. Robert and I guess we can take this corner here, and then Miranda, would you like to take that corner in the back? And then Alfred will just be here or upstairs. Is it,
Actually, what I'm going to do is I'm going to partner up with Miranda.
Perfect.
Because I think we can sort of bounce off each other. And then I actually had a question for the crowd, which is, which one of you wrote to one of my favorite bloggers, David Merkel? Because on Saturday, I'm reading one of my favorite blogs to read, which is David Merkel's blog, the Left blog. And lo and behold, there's a letter from a reader. And the reader was 24 years old, male. He attended a panel that included a CPA, a lawyer, and a financial planner at his local church. And he wanted to know, and he was talking about wanting to buy a house in the Bay Area. So I was thinking to myself, how many local churches have a financial plan panel? What's the likelihood that that church had a CPA, a lawyer, and a financial analyst? So if you did email David Merkel, come talk to me afterwards. The second thing I would say is David Merkel's response to that letter is a good one to read for anyone who's 20-something. A really good, because he answers several questions in there. Active versus passive investing, buying a house or investing towards buying a house, things like that. And he takes a perspective that's actually different from mine, and I think it's a great perspective to have and to read. So that's all I was going to say.
So who's that person?
We're not going on it with Chun, so, but afterwards, come talk to me. I'm interested because I'm a big fan of David Merkel's writing.
Great. So, panelists, if you could just go to your corner, and then we'll just,
So first question for you guys, why should you pay off your student loans? Just shut up. Some of them are pretty obvious.
You get charged interest.
Yeah. So the first one is you save money, and then another one would be, so it gives you freedom to spend your money on other items, basically. So defaulting on your student loans can have very serious consequences. I think we all know that. In fact, not repaying your student loan debt can be worse than not repaying other types of debt. Basically, it can ruin your credit score, making it difficult to do everything from signing up for your basic utilities to renting an apartment. So when should you pay off other loans before student loans? In what situation would you pay off other loans before your student loans?
The ones with higher interest rates.
Yep, that's right. So if you have other debt with higher interest rate, you'll pay that down first. And like last time, it was I talked about emergency fund. You guys remember about the emergency funds that we should all have? So it's a very good idea to build an emergency fund of at least $1,000 as you start paying down your student loan. So I'm going to give you tips on paying back your student loans faster.
The average price is $1 million. 20% is $200,000. There's no way my kids are going to save $200,000.
So the first one is that you should understand your loans and make a plan. So, there's a lot of stuff, like I told you, there's a lot of stuff online. So you need to learn how much you need to pay per month in order to pay off your loan within a specific amount of time. And so part of understanding your loan and making a plan, you have to pay attention to the details of the paperwork. So, for example, you need to make sure you're reading everything that you receive about your loans and you understand your loan terms. So, are you having interest rates that are fixed, or are you having interest rates that are variable? You guys know what fixed and variable means? Fixed means it's the same, you're paying the same interest every single time. Variable means that it's going to change. That's what the terminology is.
Usually it changes based on the index that it's indexed to, or the rate that it's indexed to. So oftentimes that's like the LIBOR rate, which is the London Interbank Offering Rate. And that is just simply set by a bunch of banks in London. They all agree on in terms of how much interest they charge each other to loan to each other. And that's set every day based upon the maturity term of the loan. And so yeah, that's basically how the floating rates you can ask me questions.
You got to think about living in a condo in many ways. If you live in an apartment.
And then making a plan includes doing that budget. So everything always comes back to budgeting. So after last week's talk, did you actually go home and try to put your budget together?
I'd rather be rather than have
So, I mean, making a budget is just all about that financial awareness, you know, how much is coming in and how much is going out. Are you spending more than what you actually have, okay? And then again, creating that emergency fund that I just talked about. So another tip about paying back student loans faster is making payments while you're still in school, if you are able to, okay? I know that some of you may not be able to. But, you know, of course, you know, when you're able to pay earlier, then, you know, you pay less, right, in the long run. See, you have to check with your loan servicer, but in most cases, there should be prepayment penalty, okay?
And when you search for your first job, you know, see if they have loan forgiveness, student loan forgiveness, and make that a part of your decision making. My wife had student loans coming out of UCSF. She was in pharmacy school, and she took a job at the VA Medical Center, and the VA actually has a student loan forgiveness program. So we were paying very close attention to what their maximum limit is annually when she did her student loan forgiveness, because it's not like, you know, you work for them for a day and they pay off, you know, $18,000 worth of student loan. You know, it's usually limited on an annual basis, like let's say $5,000 a year. So my wife and I would be like, okay, we're going to pay off $5,000 the first year, you know, in monthly increments. So we were calculating very specifically, we matched up her student loan payments with the amounts that were being forgiven by the VA, because we knew that she was going to stay with the VA for a while. So we didn't want to pay $7,000 in principal payments when only, you know, 5 was going to be forgiven. Then we'd actually have to end up paying 2 because of just the way the math worked for the VA student loan forgiveness program. So we paid very close attention to how much we were paying down and how much the VA would be willing to reimburse us, essentially.
Question. Sorry,
Sure.
a little personal.
Go ahead.
Is your wife still at the VA right now? Does she still work at the VA right now?
She still works at the VA.
I might see.
Good.
So another tip is consolidating your loans if you have multiple loans. So this may not be the best choice for everyone. For some people it can help because if you consolidate your loans, you might end up just dealing with one servicer instead of many. But then, I think the negative thing to this is that it might extend your payback period. So while this might help by giving you lower payments in the short term, also know that you'll be paying more interest in the long term. So you kind of have to look at what you're doing.
I have a question, and I don't know if there's an answer to this, but do student loans have a prepayment penalty?
You have to check with the loan servicer, but
Or the loan agreement?
yeah.
Would it be the servicer?
Follow another question. How much can you borrow? Like, what's the max? Is there a max limit on how much money you can borrow?
Everybody have experience on how much you can borrow.
What's the?
Can
I borrow 100,000? Can I borrow 50?
Usually it's charges being enough to cover your student.
Usually is.
So
they
who
look at
comes
the
up with that
school
number?
too.
Yeah, most likely they'll look at your number, at your school.
It
Oh,
depends on the school.
The loan guy.
Yeah, they'll look at what school you. If you go to state, you can get a 50,000 loan. It costs $7,000 per year. And
No.
per semester. And that's
Well,
work.
well, for me, when I took out a loan, I only took out enough, or actually, well, I just signed up for the loan and they just deferred everything. They deferred pretty much my entire tuition altogether up until a later time, up until the point when I graduate. So they only let you pay enough for you to cover your tuition, and that's it. Now, for books and school materials and supplies like that, they don't cover it.
Also, they usually do by year rate, so every year you're going to take out a new loan. Like for a federal one, it's every year I have to go through the process of applying for financial, I have to do that, but it's also for the same for accepting loans. Every year you have to do through their system and accept the loan or not accept the loan. So usually they don't give you a large sum, but they give you year by year.
What's like an average? 20?
Mine was $7,500 a year. That's enough for a state. Like it covers some year state.
For 3 semesters?
3.5 semester.
Oh, okay.
Are you still in school? Are you working?
I was thinking about going back to school. I just got laid off. So I was thinking about going to
Start
school.
your own business, get a business loan. You can borrow money.
It took a lot of money from the bank. So I was looking for other places to get more money from. I don't think the bank would say give me more money. It's good info though. Keep that in mind.
You're thinking about SBA loan,
Yeah, I don't know what this
but
is.
yeah.
Because it's talking about getting a loan.
Okay, so the next tip is actually what Alfred was just talking about, is getting help from your employer. So some employers offer assistance with your student loans as part of your benefits package. Actually, that was news for me. And so some are through your employers, and while others are more public servants oriented, like government employees might receive some assistance paying back their student loans through the U.S. Office of Personnel Management Student Loan Payment Program. And so there's a whole ton of other stuff where, yeah, people might help you with your loans. And like I know with PG&E, like if you want to go back to grad school, they actually pay for your education. So that's
Are you guys hiring anyone?
depends on what
He's a civil engineer.
You can ask your brother about that.
But she's been there for 20 years. Yeah, difference. Cool.
Yeah.
Get that crazy left out.
You can get recommended.
Okay, so another way to pay back your student loan faster is volunteering. So what this website gave was just for the AmeriCorps and the Peace Corps, and so to volunteer, they have some program to help. So another tip is to pay more than required each month. And so if you have that kind of financial situation, just make sure that what's extra that you're paying, that it goes towards your principal to lower the debt. All right, well, almost to the end. Okay, well, this one might be interesting for Alfred to comment on. So what are some tax benefits when you have student loans? So, if you earn under $60,000 a year, you can actually deduct up to $2,500 of your student loan interest you paid in the last year from your taxes.
Can you say that again?
If you earn under $60,000 a year, you can deduct up to $2,500 of student loan interest that you paid in the last year from your taxes.
It's a fairly complicated calculation, but that's accurate. Up to $2,500. It's generally phased out. So if you make over $75,000, then you actually don't get a deduction. But somewhere in between 60 and 75, it starts to get phased out in steps. And so, you know, if you make less than 60, you'll probably get pretty close to that. And for those that don't know what a deduction is, so the way taxes are calculated is basically they take, you know, the amount that you've earned, let's just say $50,000, and then they, you know, deduct certain amounts for, you know, they have a standard deduction, which I can't remember what the number is, but it's, I'm going to say about $6,000 or something like that.
It changes every
It changes every year, so I always forget what the latest amount is. But it is, let's see, the standard deduction.
What's the deduction from?
It's just, you know, if you don't itemize. So what itemize is if you have deductions for things that are allowed by the tax code. So for example, like the student loan interest or mortgage interest or property taxes. If you have itemized deductions that are greater than the standard deduction, then you would take the itemized deductions and subtract that from your income, and that would become essentially your adjusted gross income. from which your tax amount would be calculated.
Student loans are itemized.
Student loan interest would be itemized, yes.
How about if you made more than 60, but then your other deductions bring it lower? So that's the
yes, you would. Well, yes, because you make more than 60, but then you have other deductions on top of the student loan. So it's really sort of net after your student loans.
you have to apply for this or would you automatically?
Okay, so one more thing before we answer that. So if you paid more than $600 in interest to a single lender during the last year, you should actually receive a 1099. So that form showing how much interest you paid for the year. So that's what you're going to use in your tax return. So in this, you also want to know, don't extend the term of your loans unnecessarily in order to continue receiving the benefit. It's just not worth it. And one other thing is, what other tax bill, if you get a refund, consider putting all of it towards your loans and paying it. Do you have a question?
So is the deduction from student loan, is it automatic or is it you have to apply for it?
It's automatic. It's part of your, so it's just part of the form, right? It's like when you fill out your own tax return, it's essentially, tax forms are they have they have lines, and you have your income, and then you'll have like different expense lines, and so you just fill it out, and it's a part of the form. It's just a part of the form. It's not, I wouldn't say it's automatic, but you just have to fill it out as a part of your form.
So triple tax.
It just inputs it in for you.
Just answer the question. Okay. Okay, so I'm almost there. So another tip is to enlist your co-signer. So some of you might have, your co-signer might be your mom and dad, so ask your mom and dad to help you. That's what that means. And another tip is to ask for loan repayment money for gifts. So this might be hard, but instead of your Christmas gift or your birthday gift, ask people to give you money to help you pay back. And the last one, this is a last resort and it's absolutely not recommended, is deferment or forbearance. And so avoid them both if you can. Neither is an ideal option.
What is that?
So in deferment, you can take a break from paying the principal on your federal loans if you're unable to find work, or if you meet the criteria for economic hardship. That's deferment. So forbearance, if you don't meet the criteria for deferment on federal loans, or if you have private education loans, forbearance allows you to stop or reduce payments for a specific period of time. But try to more than
Does that affect your credit?
does it affect your credit? If you don't pay your loan, eventually it will affect your credit.
So the deferment or forbearance, it's basically a break from your loans up until the point where, you mentioned there's obviously a time limit. Is there a way where you can kind of say like, extend the loan out? But what I'm saying is, or what I'm trying to say is, say for example, I owe say $2,000 a year, $2,000 a year in loans. And for 3 years, can I kind of extend that out to say $1,000 a year instead of 3 years? I'm paying it off in 6 years. Can I do that? Or
What was the question?
my question was, say for example, I am obligated to pay $2,000 a year for 3 years in loans. Now, is it possible that if I can say, instead of paying $2,000, I pay $1,000 per year in loans, but stretch that out from 3 years to 6 years?
You'd actually have to talk to the lender about that.
Okay.
Because that's essentially asking the lender to restructure your debt and restructure the payment schedule, which is usually governed by the loan agreement.
Oh, okay. So that means you have to start that process all over.
You actually would have to, yeah, you'd have to talk to the loan lender. Not even the loan servicer would be able to make that for you, make that happen for you. You actually have to talk to someone at the lender about the loan agreement.
Hey guys, hello. Here from the finance panel? Yeah, okay, so investments is upstairs, budgeting,
And
like personal taxes here, there.
what I was actually about to look up is, as I recall, there is so when you have student loan forgiveness, you have what's called cancellation of indebtedness income, and you generally have to pay taxes on that, which means like if you were to work for AmeriCorps and have $10,000 of your loans forgiven, you would actually have to pay taxes on the $10,000 of loan forgiveness. But typically, so that's typical for any type of debt whatsoever. If you have any type of debt forgiveness, you generally have to pay taxes on that. But there is actually an exception or exclusion for student loan interest, and I was actually trying to look it up because I couldn't remember the amount, and I couldn't remember what conditions or limitations there were. And so I was just looking it up now, and basically, if a student loan is discharged because an individual works for a specified period of time in certain professions for a broad class of employers, such as a doctor or a nurse in an underserved rural area, then there's a special income exclusion for student loan forgiveness, which would mean that you wouldn't have to pay taxes, just depending on the situation. So, but that's something to look into. If your student loans are actually forgiven, it's possible that you won't have to pay taxes on it. That's what I wanted to tell you.
Principal loan, 43%.
Okay, well, that's all I have in terms of prepared materials. So, you guys have any questions for Alfred? Tax-related questions? Or just questions
Whoops.
or questions in general on like our personal situations?
Yeah, I got tax questions.
No, you can go first.
All right. Is there any way to defer taxes? Because this year, I sent a form in to my employer. You know how like your employer takes taxes away?
Yeah, he withholds. They withhold.
Yeah.
Right.
I stopped that because I wanted more money. And
okay.
So they didn't take any taxes away. So I guess I owe a lot of money this year. But I don't have the money right now. I have it later. So is there any way I could defer it and say, hey, I don't have the money now, but can I pay the government next year?
You would need to actually ask, you would have to negotiate that with the IRS. And honestly, if you're going to do that, you're going to need a lawyer. Because the truth is, the IRS will not listen to you unless you have a lawyer.
Is there a process, like appeals or something I can go through?
There are processes in terms of negotiating that, yes. But again, you should talk to a tax lawyer about that. Right. Here's the thing, right? Like, not withholding. By not withholding, you potentially put yourself...
Like more deferment, right? Like, hey,
no. So there's something called an underpayment penalty. So the reason why we withhold is because we have to pay, or at least what happens when you withhold is the employer takes the money out from your paycheck and then sends it to the IRS and reports that to the IRS on a quarterly basis. When you actually file your tax return with the IRS, they're going to see how much you withhold versus how much you owe and how much you should have withheld on each quarter. And if you don't withhold enough each quarter, then you are assessed an underpayment penalty.
Oh crap.
So on top of what you owe, you will also owe an underpayment penalty. Now most tax lawyers, good ones, may be able to get you out of paying those underpayment penalties. It will be very difficult for them to have the IRS reduce your tax liability, but they may be able to negotiate a payment plan given the fact that you aren't working right now. They may be able to say, hey, you can't pay it, you know, you can't, the term I like to say is, you can't strip meat off of a dead carcass. If the client doesn't have the money to pay, you can't force him to pay something he doesn't have.
So is it like payment plans?
Sorry?
Like payment plans?
Yeah, so you would go on maybe a payment plan or something like that. And, but you know, personally, I think, I'll be honest with you, I think it's really stupid because now you're paying, you know, a tax lawyer also, right? So that you don't, yeah, well, that's the thing, right? Like, the tax lawyer is going to want to get paid first even before the IRS. So, you know, in my mind, that's just not a really smart thing to do. Because, yeah, I mean, the tax lawyer might be able to get you out of the underpayment penalties.
Because I did it the year before too. I asked my employer not to withhold. And it was fine because I was able to pay my taxes because I was still employed.
But they didn't assess an underpayment penalty?
No, they didn't.
You had enough money to pay that?
I had enough money to pay whatever they didn't withhold.
Okay.
And I didn't have to pay any kind of penalty.
Are you sure?
Yes.
For the entire year?
Yes.
Okay. I'm just saying, there is an underpayment penalty.
I was working overseas, that's why.
Oh.
Also, so that's why, you know that $90,000.
There's an exemption for, right. So there's an exemption for, when you work overseas, it used to be 85, but I guess now it's 90. The first 95, 90, whatever, however much the exemption isn't taxed here in the U.S. So you're fortunate there. But still, yeah, not withholding, you'll probably be assessed a withholding prepayment penalty.
Is that like a small penalty?
It could be pretty large. I mean, I don't know the mechanics of the penalty calculation because I've never actually done it by hand. I've always had, you know, some tax software do it for me. But
under 10,000?
I don't think there's a limit.
Okay.
But yeah, I don't know how much that is. It's hard to say. I think we'll look. Maybe I can look it up.
So, when you guys start working, your employer will give you like a W-4 fill out, in which that's where you indicate by number, like your single and how many exemptions. So that's, and then they look up a table, and that's how much tax they're going to withhold from your pay.
What's an exemption?
So for example, on your tax return, your personal exemption, you're like number one. Then for example, if you have a spouse, that's two personal exemptions. You have kids, then each person is a personal exemption. So
it's an amount that you don't have to pay. It's an amount of income that you don't have to pay pay taxes in. It's basically like a deduction. It's just like a deduction. They just figure, okay, and that's just a policy decision. Like, they figure, okay, people, you know, if you make $6,000 a year, you're going to need the $6,000 to, you know, pay for food and electricity and all that. So they give you a deduction of $6,000 or however much the exemption is per person on a per person basis. And, you know, that includes dependents, which, you know, you care for or, you know, pay expenses for.
So you kind of look at your situation every year, like for example, if you file taxes and you're getting refunds a lot, and you probably want to adjust your W-4 so that you don't get that much refunds, that the government is not using
I actually have a question. Well, I didn't, I also work overseas, kind of like Ben, but mine was, on my side, I'm more in uniform. So For armed service members, armed forces members, they have, I don't know if you ever heard of it, an LES or leave earning statement form. So it's kind of like a W-4, but not exactly. And my thing is, my question is, how do I translate those numbers to, say, for example, a 1040? Because I can't provide a W-4 for last year because I don't have any.
They'll give you a W-4. It's in your LES.
But
it's like a portal or whatever. The MyPay.
Oh yeah.
FastPay.
Oh yeah. The DFAST. The DFAST payment.
It's tax time. You just say click on the W-4 button or something.
Oh okay. Okay. You gotta show me how to do it.
Somewhere.
Somewhere. So and that automatically converts all the numbers into a W-4, and then I could just.
They give you a W-4.
Okay. Okay, yeah, because all I got were LESs, and I never got a W-4.
I'm not familiar with it.
Can we talk more about like tax avoidance and like saving more money?
So I had a question. What was your advice on budgeting? Like how to make a budget?
Just make enough money so you don't have a budget.
No matter how much money you make, you should have a budget. So, so the first thing,
50.
so it's the 50, 20, 30 rule. So 50%. Well, first, what's your income? Do you know how to use an Excel spreadsheet?
Yeah.
Okay, so basically set up 12 columns, January, February, March, all the way down. Put your first row as income, so you know what your monthly income is. Now, when you do your income, you should be using your net income, not your gross income, because that's not what you're using. So it's net income after all the taxes are taken out. So use your net income, and put that all the way across. That's what you receive every month. Then list out all the expenses that you spend every single month. First start with your must-need expenses, and then, but be realistic. What are you actually spending? If you are spending a lot of money on entertainment, then you want to bring down, because you need to be realistic. Sometimes it takes almost a year to put together a realistic budget. But I think at your age, you probably should be able to put together a very simple budget, because hopefully your expenses are not that much. So then, then you look at it, look at your expenses, look at your income. Is it a positive number or a negative number? If it's a negative number, then you need to look hard at your expenses. Either you're going to have to get another part-time job and increase the income, or you're going to have to decrease the expenses.
So I have good news for you, which is compensation not subject to withholding. So basically, for armed service personnel serving in a combat zone, your compensation is not subject to withholding. Because
Right.
So that's so
right, because I hear I think once every month we get taxed, or on paper we get taxed, but we always get refunded the same amount that we were taxed on that month.
Right, because you're not subject to withholding.
Yeah.
When you're in a combat zone.
Right.
So I have to admit, this is the first time I've ever seen that, because I don't actually do tax returns for armed service individuals, so it's interesting. I've never seen that before. But
I'm your guinea pig.
So so you don't actually have to withhold when you were in Afghanistan, but now that you are back here stateside,
right, now I have to pay tax.
You will now actually have to pay tax, and any income that you earn while here would be withheld. Right, it should be withheld. Yeah. So that answers that question. I'm trying to think, what else is there?
So like, if I can't defer my taxes, how can I deduct a lot of
them? I don't know that there's a way to deduct taxes, deduct income, except that you're not making any. So when you're not making any, you don't have any deductions.
I have to pay taxes. I already made a lot.
You made a lot last year.
This year. 6 months.
In 6 months this year, you made a lot. Was it here in the United States?
No, it was overseas, but the program was that overseas 90,000 deduction.
It's the exemption.
I was only working for 6 months, so it was prorated for 50%. So I still owe a lot. I'm still gonna owe a lot of taxes.
Wait, the foreign tax is prorated? The exemption when you're overseas?
Yeah, it's prorated.
Did you pay any foreign income tax?
No. Tell me what the rich people do so they don't pay taxes, so I can do the same thing.
Well, the rich people invest their money in things where they are allowed deductions which are non-tax deductions. So, for example, a lot of wealthy families will buy real estate as investments, and then, you know, because real estate rental income tends to come all in the form of cash, but the number of expenses that they can take include A, mortgage interest, which is a cash deduction, but more importantly, they're able to take deductions on depreciation of buildings, and because depreciation is not a cash deduction, because it's a complete non-cash deduction, they can, you know, essentially take rental income and not have to pay that much tax
On the
for it.
depreciation, who figures that out? Can I just say it depreciated 50%?
No, there's a table. There's a table for, you know, for depreciating taxes, but the thing is, you know, you'd actually have to buy a property, and there's actually limits to what you can deduct as well, because there are what's called passive activity loss rules, and so you cannot deduct more than what you make from, you know, in terms of rental income on those properties.
Oh, okay.
So those are, you know, among the strategies that the wealthy employ.
Is there anything else?
And they like to defer. Well, the other thing is, you know, when buildings depreciate, their basis goes down. The cost basis of the property goes down. And so what happens is usually when, you know, the wealthy are older, as the property continues to depreciate, then their cost basis gets to a really low level. And when they pass away, when the wealthy pass away, all of the basis gets stepped up to market value. So they actually avoid having to pay taxes on the depreciation, what's called depreciation recapture. But then they have already passed away, and it's someone else's problem. So I don't know that. You know.
Can I just share something?
Sure.
When you pretty much depreciate the cost basis,
Right.
you can do a 1031 exchange. You
Yes.
sell your property and buy the other one. So
Right.
then you start over again the depreciation. You know, then most people you have one.
But it gets carryover basis on 1031. So it doesn't get a re-step up, right, of the cost.
Depreciation start over.
But
The new property.
But the new property has the old basis.
No, when you sold it, you put it in the intermediate escrow company. So you do 1031
Okay.
exchange to another, then you become partial. For example, you own a building, an apartment, you buy a bigger one, so you become the shares.
Oh yeah.
And
If you buy a bigger one, but you actually have to pay. Go ahead.
No, you buy the shares. For example, you earn like, say, 100,000. You put 100,000 in there. Maybe you own 20 shares of a bigger building. So for that building, you start a new depreciation. So then you start over again.
I don't know if that's accurate, because I feel like don't you have to carry over your old basis?
No.
What's your
It's a
new
different
basis?
property though, right?
It's a
So
different
why would you
property.
carry over?
No,
1031 exchange.
but your new basis, what's it going to be? What's the cost going to be?
The amount you, the building you bought.
I don't know if that's accurate. On a 1031 exchange, yes, you defer the gain, but my understanding is that you have carryover basis.
Sir, is there any other non-real estate ways you can help out with
Oh,
taxes?
take a look. I'm not aware of any. Hold on, let me think. 1031 exchange, carryover basis.
You're talking about taxes, you're talking about investment earning without paying taxes, or you want to deduct the taxes,
Just not pay so much tax, or any at all. Not just not so much. But yeah, I think I have to pay a lot of taxes this year, so try to mitigate that.
Are you itemizing?
So itemizing is like the mortgage, right? Student loans. I think so, yes. I will be.
Okay. So think of ways that you can increase your itemized deductions, like.
But he said there's a limit, right? Like, can I
No, there's
does it
no
look
limit for
suspicious?
the itemized deductions, but
Does it look suspicious, I guess, if I itemize like $40,000 worth of stuff?
No.
That you're gonna, if you, when
But
you
it'll
get to
be red
charity,
flagged,
yeah,
yeah.
it'll be red flagged. Then you
But
get,
as long as I have receipts and stuff I can back it up with, right? Then
If you don't have a business, it's very difficult to itemize that.
so you don't wanna raise a red flag, you don't wanna be audited by the IRS. It'll be a
Yeah.
living
Do
nightmare.
something stupid.
Now, personally,
I was trying to find a smart way to pay less taxes. To pay less taxes.
yeah, but even if you're a small business owner, that in and of itself, yeah, so you can deduct more things, but you would still be,
within the, yeah,
yeah, but you would be at a higher risk for an audit.
yeah.
Almost certainly be a higher risk.
So have you set up IRAs?
I don't believe in that.
Roth IRAs, these are ways to do tax deferred income into retirement.
I don't
Those
believe
are,
it.
those
You know,
are,
one thing I really like Alpha did, he bought a Roth IRA. Okay, I made my son bought his first Roth IRA because we did a calculation. They say, you start to work, you put 5,000 IRA. By the time when you're 60, okay, you start working at 13. By the time you become 60, because it's Roth IRA, that means you cannot deduct from your tax. All the gain is tax-free by the time you're 60. You know, all those gains. What kind of investment you have, all those gains doesn't have to pay tax. A lot of people think I put IRA, it just defer the tax. The thing is, if you really want to learn, you know, go to PBS, Ed Slot, you know, he has many books come out. If you have the IRA, you got a twin brother, that's Uncle Sam. You gain more, that he will open half. You know, if in the future makes a lot of money, he will take half of it.
So my parents really started traditional IRA because
That's IRA,
for some
yeah.
reason I was like $600 for taxes. And I was working part time. And it was either about 3,000.
Convert it now.
yeah.
You can convert it and pay, because so little, you want to get the apple seed or the full out apples on the tree.
Yeah, because back then, it was a long time ago, it was all traditional IRA, and then the Roth IRAs.
And you want to convert it at a time when your tax
Oh
rate
no,
is-
I kind of.
So right now, because your income is so low, you kind of want to do it now when your tax rate is, whatever it is, it's probably like, you know, very small as compared to later on when you're working.
What are the, well, I mean, you guys have also already mentioned benefits of the Roth IRA. What are some shortcomings?
The shortcomings is you don't get to use the money right now.
That's a very good.
So it's like it's basically a long-term investment.
Right,
Yeah,
and it makes sense to do it. I mean, you know, basically, yeah, it makes sense to do it.
And your Roth IRA, you did not lose money, right?
No.
That's very important because Roth IRA money is that means after tax. You already, because you did not deduct the tax. So that means you already paid the tax. So when you pay the tax, you don't want to lose the money. So he did a very smart thing. So you put something, you never lose the money for the Roth IRA. Well, I hate to lose money on my Roth IRA.
Yeah.
Yeah, yeah.
There wasn't any deductions when you took it out 13 years later?
No, because it's tax free.
Because it's Roth. If
It's
you
after
have the
tax.
IRA,
It's after. It's
then you pay 10%.
right. So the contribution to a Roth IRA is with what's called after tax dollars. You've already paid taxes on those dollars. So when it comes out, it will be
Did you take it out
considered after
anytime?
tax. No. So you can only take it out for limited reasons. One of which is to purchase a property. So that's the reason why I liquidated that investment to buy my first house. The other is you have to wait until you're age whatever. I can't remember what the age is. I think almost is 62, but it might be 70. There are a couple other reasons too, and I can't remember what those reasons are that you can take it out without having to pay tax or a penalty. Yeah. So I think it's. I want to say that.
First 5 years you cannot touch.
So if I start a business and lose a lot of money and shut down in like 2 months, I can expense all that, right? And say, hey.
So you're going to be filing a Schedule C. So.
Audit.
Yeah, I
Oh,
mean,
you're
you can
almost
audit me. I'd be
guaranteed.
like, yeah, I lost all this money. I can't pay, I gotta pay less taxes. I can
Don't
do
think
that.
it's that easy. That's what I would caution you now. The IRS is going to be coming with guns. I'm not joking about that. When I was a tax lawyer, I had clients where literally the IRS agents came in with guns.
But they're invading millions, right? They're just,
No, they were a
20,
small
30,000.
Korean couple owning a dry cleaning based business in the middle of Central Valley. They're 60 years old ish. They were evading taxes. Yeah. Don't think it's an easy task to go through an IRS audit.
A lot of free time now.
It's not the free time. It's not the free time, and I would say deferring. Yes, opening an IRA is a good idea. That's a good start. Yes, you can definitely defer the income, but if you don't have cash, then I don't know how.
That might not be an option for you.
What are other options? Well,
So if I put 40,000 into an IRA, can I do that?
No, there's a limitation.
There's a cap.
It's 5,500.
Every year there's a cap of how much you can purchase.
I think 5,000.
5,500 maximum per year.
Yes.
And I think it's also based on your income too. From what I understand, if you make too much, you can't put money.
Oh yeah. If you make too much, you can't even put it in.
What is too much?
I don't remember what the number is. It changes every year.
What
I'm
other
income
options are there outside of a Roth IRA? Say if I wanted to create like some sort of savings or some sort of small time deposit / investment.
I don't know if in the government, whether or not you guys have 403Bs for this armed services. Do you guys know?
I don't know what the.
Well, we had the what is that? Is it
military.
Something SP? It's a savings plan.
Oh, TSP.
TSP.
That's the government. That's the government version of 401k. Because Julie has the same thing.
Right.
VA. One idea is if you do open your own business, maybe you can do a key-off plan or some sort of self-employment retirement plan. Or self-employed, yeah, SEP IRA is what I'm thinking.
Swipe right.
But that's just a thought.
Can I share something, what I'm trying to do? What we help people is do all the investment you have to pay, all the earning you have to pay tax. There's one way to buy certain kind of life insurance that they use the maximum cash accumulation. So that's all the cash within the life insurance that's tax deferred. Of course, you have cost of life insurance and you have death benefit. But all the cash within there, then when you accumulate enough cash in there, you tell the life insurances, I want to borrow money. Okay, when you borrow money, all those you accumulate in there, you don't take out from your own money. It says, okay, I want to borrow 50,000. Insurance said they don't ask you any reason. They give you 50,000 from their general fund, but you have your money in there as a collateral. So when you borrow money to use to buy a car, buy whatever you use, and there's no tax. Yeah, and the only thing is you have to pay interest for the life insurance. However, your money is still in the investment. So all the money in those life insurance, you don't lose money. Yeah, if the market goes really down, that year you don't have any interest. But they always go, if that's go up, they have to go up. So that's the best way leverage you borrow money and you don't have to pay tax for all the money you earn inside life insurance. But you have to know how to structure that. Yeah, that is what we do for some very rich people. You know, some young couple, we do that. So this is something, looking at all the investment, you have to pay tax. But doing that way, you don't have to.
I personally am not crazy about life insurance as an investment vehicle, but
In terms of tax, you think about tax consequences.
no, you know, here's the thing about life insurance is you are taking on credit risk. You're taking on the risk that the life insurance company will be around to pay you. And that's a risk that is not necessarily a good one. If you
have
ask,
to
right?
pick
So
the,
like, so like
A-grade.
AIG, right? You don't, I mean, AIG no longer exists, or at least a shell of its former self. Other insurers, you know,
Oh no, I have to correct that one because when 2008 AIG things, AIG under AIG they have like 128 subdivisions. There's a two insurance under AIG, still rated A, and during that time, credit risk, those two divisions no impact. They are making money. The rest because they are risk their investment. But those two insurance is the most safe one because governed by 50 states. So whatever they have announced, the insurance commissioner required that company to reserve that much equally for the money. So it's
yeah, but 2 out of how many? 2 out of how many?
no, because nothing to do with the AIG because those two American General still there, still rated. Yeah, there's another one, I forgot the name. Yeah, there's no impact on that.
Only 2. And the thing
That's
is,
the life
and
insurance.
AIG's lucky because AIG received the bailout.
Yeah, it's for
And
other
so,
divisions.
yeah, but here's the thing, right? If you don't get a bailout, then all of it goes, right?
No.
So, except for what's reserved.
No, each individual division, so they separate.
And the problem with it, again, is insurance is not a very well understood investment. It's just not well understood at all.
That's true.
And
Majority
you don't
people don't
understand what the credit risks the insurance company is taking. So that's the big issue that I have with insurance is that you cannot see the underlying investments that they are making. Not only can you not see that, and if you can't see that, then how do you measure the risk that you're taking on by putting money in with the insurance company? So how do you study that though? Because the insurance company doesn't disclose that to you.
We do.
Where?
I visit them, so. The
What do they invest in? Right? And that's the thing, is that you can't, you have to really investigate what they're investing in. And that's,
So that's just a misconception because those
Is there
people.
any other tax tips? You get about it's like offshore something or
no, there's no
taking
offshoring,
injury.
there's no taking an injury, there's,
Okay, if I actually get injured,
there's, no.
I have a friend who works in an investigating company for workers' comp. Don't do it.
no, I'm saying like if my arm literally breaks,
If, I would say, I don't see it.
Do any of you have questions before we wrap up?
I just had a general question earlier. I wasn't here last week, so what's the 50-30?
Oh, okay. So as I was describing the budget, so 50% of your income should be allocated to your must-have expenses, and then I think it was 20% to like obligations. So like if you have a student loan, so 20% should be allocated to that, and 30% is your kind of your leftover. That's nice to have. So that's the 50, 20, 30. Yeah. So if you were,
Always better to have more into your 20% as if you can add more.
if you can reduce the debt, it's always better just to get rid of the debt.
Say,
Try to be debt free.
say you're not in debt and you have like a full-time job, do you have like a recommended percentage of how much should go to just savings?
So, yes, so that's your 20%, yeah.
Okay.
So if you have time to put stuff into savings, do it now. Because later on, it's going to get a lot harder. Yeah.
My parents had the 3-jar thing too. It was 10% offering, 45% savings, and 45% spending. But then I realized as I got older and I had to pay for more things, it was harder to save that 45%.
Yeah, for me, actually, when I was still overseas, I gave my mom power of attorney over my bank account. And what she did was she told me that she put $10,000 of my overall income into a savings account. So basically, there's $10,000, kind of like an emergency fund, kind of a rain check.
Anything else? Want to hear personal stories or anything like that?
I was just going to let you know that if you have any type of veterans bonuses paid by a state or local government entity, that it may be excludable from income. So it may not have to be, you might not have to pay taxes on that. Again, consult your tax consultant.
How about state taxes? Is there anything you can do about that?
Generally, California state tax rules follow federal rules. There are only a few limitations otherwise, but I don't think there's anything there either. Yeah, I wouldn't recommend any client of mine to falsify their tax returns, do any type of fraudulent activity. What I would recommend is, seeing if I were your tax lawyer, I would say, we'll see if we can get the underpayment penalties waived, and we'll see if we can get the IRS to agree to some sort of payment plan. But aside from that, I don't know that there's a way you can exclude income or deduct or take enough deductions to make a difference.
Okay.
But I would say, opening an IRA is a good
penalty,
idea.
like that thing we're talking about, does it hurt my credit?
Well, I think owing the IRS probably will eventually be a debt that, gets reported to the credit agencies. I don't know how that happens. I don't know how mechanically that works, but it probably is something that goes on to your credit report.
Okay.
Try to deal with that.
Deal with what?
Try to deal with what you owe the government. You don't want to, eventually when you have a job, they can always put liens on your paycheck and then
Yeah, that's fine. I'll have a job then. Whatever.
Yeah. So anyway, I'm just saying.
They'll garnish amounts from your wages.
So I think just to wrap up, from a biblical standpoint, I think God wants us to be good stewards of our money. So just the whole budgeting aspect, just taking care of what God has given us. So I think just have that concept in mind. To just take care of what God gives us. And then I think in terms of your question early on, how God helped us in our careers. So I feel like God really paved my way in my career. I think in all of my career, I think I've only had to go through one interview, and everything else, I think God just opened doors for me. And in terms of climbing the ladder, at this point, I've always worked 20 years at PG&E. I could be a supervisor, but I choose not to be because my first priority is to take care of my family. And if I were to be a supervisor, I would end up being at work, probably long hours, and not being at home with my kids. And I think I desire to disciple my kids and everything, and if I'm at work, I'm never going to be discipling my kids. So I think, as you're thinking about your career, I think having connections, I think, is very important. Because I shared about how I got the PG&E job, and it was through a Christian friend. who was actually moving to Hawaii. And his
It's a
position was
no-brainer. If it's on
vacated,
the offer's on the table.
I'm applying. I
Take it,
said,
grab it.
sure, why not? And it was actually at the right time because I just got my CPA license. I was ready, and I knew that this life was not the life that I wanted to continue living. And then so I did not know this until I got hired, but there was actually another friend, another person that I knew from college who was also a Christian. He was actually at PG&E, and he actually put in the work, and that's how I got my job at PG&E. So I think his connection is really important too, who you know. And so if you're in the accounting major, if you're interested in applying for a job at PG&E, I would definitely try to help you.
Can you help other majors too? Too bad.
I can try, but I don't have the inside connections as much as I do in the controllers.
I was going to tell you, you have 180 days after you leave the combat zone to file your taxes.
For this fiscal year.
For this year, yes.
6 months.
That is plenty of time. 6 months. So it's about December, no. Well, I left.
No, 180 days after he leaves
after
the combat zone.
And I left in early May.
Oh.
So, yeah.
No, it's effectively, well, according to my orders, it's December because my orders were up June 12th. I had a 3-week period, kind of a transition period from between coming back from a combat zone to being back at home.
That's a good idea. It did work for me.
Yeah, the extension for filing returns and taxes for the period of the combat contingency operation service or hospitalization plus 180 days.
Working for the IRS guy with
Good luck getting a job with the IRS. It's really hard to get a job with the IRS.
Who do you work for now, Alfred?
I work for a private.
Try looking for like board
Thought about that.
But
customs agencies.
The problem is where I work in state busting out
the worst. That's
I
not the IRS.
so I don't know if
The IRS doesn't bust down
change
for
company
no, he does.
again.
That's not them though, is it? Isn't it like
No,
some
it's them.
kind of,
the IRS.
They can carry guns. Yeah,
Is it
federal
with
agents.
even without a federal agent, without a
No,
warrant
they
of
don't
arrest?
need a warrant. But it's just they would get one.
So they would still come in with a warrant
They'll get it.
and
They'll get everything they need. Yeah.
do what SWAT does.
The IRS can go into your bank account.
Even
Even that's from Pursuit of Happiness.
if a new company comes again,
Can they go? Well, they can.
2015,
They can ask the bank to get it for you.
it's going to be the same thing.
Well, in a Pursuit of Happiness, they just took it out of the account.
No, I don't know about that one, but I don't know if they can just take it out.
Yeah.
Let's see, is there anything else?
For my current company,
Yeah,
2708.
see there is.
If you were audited, you might actually have a little bit of a benefit. Let me see.
Right now, it's just a 6-month extension. We're in the middle of it.
Some things I don't know. So I have to actually.
Oh, I can always delay I can extend my filing, right? That's
What will happen is
take a couple months.
will happen at the end of
Yeah,
the
but the interest and penalties run from the date that the filing is due. Extending it doesn't do anything for that.
15 seconds here.
Gave me a good perspective in just what is important in managing just these things as you go on in life. It is very important, and yeah, I learned a lot from this seminar, so thank you very much. And can you speak on just some of the topics that your group went over? Yeah, so our group went over various stuff such as student loans, filing taxes, evading taxes, funny enough, just certain strategies as you do grow up in terms of saving money, in terms of just doing what you need to do. So would you recommend that they give this seminar in the future? Oh, absolutely I would. I definitely think just people from all walks of life in church, in actually anybody, could really benefit in just learning more about just finances. Finances applies to everyone, no matter if you go to church, if you don't go to church, everyone that lives
definitely does need to learn about this stuff. So it was very helpful. One more question. How are you going to use what you learned today moving forward from this point? Well, you know, I think just taking everything that everybody said, every ounce of wisdom, just every tip that they gave about just managing finances, especially coming out of college. What are some practical steps you can take just to set yourself up better for the future? I think it definitely gives me some things to think about as I go on now, and I'm just going to try to apply it various ways, such as budgeting, spending wiser, making better decisions in that sense, and hopefully it'll pay off down the line. Yeah, so... okay,